If you're a senior who has found a brand new home and plan to use a reverse mortgage to buy it, there's a specific FHA rule that could stop that transaction completely. And most people don't find out about it until they're already under contract. The builder could be weeks away from handing over the keys and the loan still won't close. The issue isn't the home itself, it's where the home sits within the FHA's construction status definitions at the time of your application. This video explains what that rule is, how FHA defines each stage of construction, what has to happen before a HECM for purchase can close on a new build, and how to protect yourself before you sign anything with the builder. A HECM for purchase is a program that allows borrowers 62 and older to buy a new primary residence and obtain a reverse mortgage within a single transaction. Instead of making monthly mortgage payments, the borrower brings a down payment to closing and the HECM covers the rest. The loan doesn't come due until the borrower moves out, sells the home, or passes away. It's a legitimate and often underused tool for seniors who want to right-size their living situation, move closer to family, or buy into a new community without committing a large portion of their liquid assets to cash purchase or taking on monthly mortgage payments in retirement. So the program is FHA insured, which means FHA's property eligibility rules apply. And one of those rules creates a hard stop for new construction properties that aren't far enough along in the process. FHA divides new construction into 3 distinct categories, and the category your home falls into at the time of your application determines whether a HECM for purchase can close. The first category is proposed construction. This refers to a property where no concrete or permanent material has been placed. Digging a footing does not count as permanent. So if the home exists only on paper or the ground has been prepared but nothing permanent has gone in, the property is in a proposed construction status. The second category is under construction. This covers the period from the first placement of permanent material all the way through 100% completion, but only up to the point where a certificate of occupancy has been issued. A home that's 95% finished with trim work remaining and a move-in date 3 weeks away is still under construction under FHA's definition if the certificate of occupancy has not been issued. The third category is existing less than a year. This refers to a property that is 100% complete, that has had a certificate of occupancy issued and has never been occupied. The home is finished, the certificate of occupancy is in hand, and no one has lived there yet. Here's where the HECM for purchase program creates a specific problem for new construction buyers. FHA's definition of an eligible HECM property includes both existing construction and new construction, so the program is not closed off to new builds entirely. The issue is timing. For a HECM for purchase to close on a new construction property, the property must be 100% complete and have a certificate of occupancy issued before closing. A home in proposed construction or under construction status at the time of closing is not eligible. That means a borrower who signs a contract on a new build that is 6 months from completion cannot simply just wait for the home to be finished and then close. The HECM for purchase transaction has to take place after the certificate of occupancy is issued. The closing cannot happen before that documentation exists. For condominium units, the requirement is the same. The certificate of occupancy or its equivalent must be in hand before the transaction can close. Most seniors who run into this problem have done everything right up until this point. They've met with a lender, they've completed their required HECM counseling, they've found a builder that they trust and a floor plan that they love, they've signed a purchase contract, and then someone in the loan process identifies the construction status and the timeline just doesn't work. The builder's projected completion date and the certificate of occupancy issuance date are 2 different things. A builder can tell you the home will be ready in 90 days, and the certificate of occupancy can come in 30 days after that or longer, depending on local municipality timelines for inspections and approvals. So a borrower who is counting on a specific closing date can find themselves in a gap between when the builder says the home is done and when FHA considers it eligible. I recently worked with a borrower who had sold her existing home, moved into a short-term rental, and was counting on closing on her new build within a very specific window. The builder's completion estimate shifted and the certificate of occupancy came later than projected, and the gap between where she expected to be and where FHA required her to be created real financial pressure. The loan did close, but the timeline cost her more than she had planned for. The lesson is that the builder's timeline and FHA's eligibility requirements have to be aligned before you sign a contract, not after. For a HECM for purchase to close on a new construction home, these conditions must be met. The property must be 100% complete, a certificate of occupancy or its equivalent must have been issued, the property must never have been occupied, the construction must meet HUD's minimum property requirements and minimum property standards. FHA also requires specific documentation in the loan file for new construction properties, including Form HUD-92541, the builder's certificate of plans and specifications and site, Form HUD-92544, which is the warranty of completion of construction, a copy of the certificate of occupancy, required inspections depending on the construction status at the time of the appraisal, and a wood infestation report unless the property is an exempt county. The inspection requirement deserves attention here. For a property in proposed construction or under construction status at the time the appraisal is ordered, additional inspections are required beyond the certificate of occupancy itself. For a property that is existing less than 1 year at the time of appraisal, a copy of the certificate of occupancy or final inspection from the local authority satisfies the requirement. This means the timing of the appraisal relative to the construction status also matters. A borrower who orders the appraisal too early in the construction process triggers a more involved inspection requirement than one who waits till the home is further along. The most important thing a senior buyer can do before signing a purchase contract on a new construction home is have a conversation with the HECM lender about the builder's projected certificate of occupancy date, not just the projected completion date. These two dates are not the same, and the gap between them is where the transactions run into trouble. So before you sign, get clarity on the builder's projected substantial completion date, the local municipality's typical timeline for inspections and certificate of occupancy issuance after closing, whether the purchase contract allows for flexibility if the certificate of occupancy is delayed, what your personal timeline looks like, and whether a gap between your expected closing date and the certificate of occupancy issuance date creates a financial problem for you. So if you are selling an existing home to fund part of the down payment on the new build, the coordination between your sale closing and your purchase closing becomes even more important. A delay in the certificate of occupancy can create a gap in housing that has real cost. A HECM lender who has worked with new construction transactions will know the right questions to ask the builder and can help you structure the transaction so the timeline works before you're locked into a contract. FHA does allow HECM for purchase on new construction homes. The program is not closed to new builds, but the eligibility requirements is specific. The home must be 100% complete and have a certificate of occupancy issued before the loan can close. A home that is proposed construction or under construction at the time of closing is not eligible regardless of how close it is to being finished. So before you sign a purchase contract on a new build with the intention of using a reverse mortgage, confirm the builder's projected certificate of occupancy date, not just their completion estimate. Understand the local municipality's inspection and certificate of occupancy issuance timeline. Make sure your personal financial timeline can accommodate a potential gap, and talk to a HECM lender before you sign, not after. If you're a senior considering a new construction home and want to understand whether a HECM for purchase makes sense for your situation, what the timeline might look like, and how to structure the transaction correctly from the start, use the link below to book a call with my team. Those conversations are most useful before you sign a purchase contract, when there's still time to plan around the builder's timeline and FHA's requirements without deadline pressure. And if you want straightforward explanation of how reverse mortgages and the home buying process work, make sure to hit that subscribe button. My goal is to help you make informed decisions with confidence and ultimately win with Wade. We'll see you on the next one.